Okay, folks, welcome to the UK House Price Index according to Zoopla. September 2024, Zoopla has put out their house price index in their October research. It's quite interesting reading, and it kind of the good thing about what I find about the Zoopla house price index, it measures real time information. So it's real time property information as how Zoopla is responding to their website. And what happens is the land registry, the UK land registry, which is the Scottish House Price Index via the government, shows exactly what's happened historically, and they're a good complementary between each other because one tells you what's just happened, and one tells you kind of what's happening right now, which is Zoopla. You get your usual ones like the Nationwide House Price Index, the Halifax House Price Index, and they're saying that house prices have reached a meteoric high. I kind of take that tongue in cheek, more than likely because the data isn't as vast as the Zoopla index, and also the Scottish House Price Index and the UK House Price Index as well, because that's all the information collated. Let me give you an example. If 1 month, the average house price in Shetland, for example, because there's only one or two properties sell every month in Shetland area, because it's a small population, and they do measure it, but they do say this: if one property actually sells at 200,000, then the average house price in that month is 200,000, and then the next month in Shetland, if another house sells and it's 300,000, all of a sudden the average house price in Shetland is 300,000, and it's gone up 50% in house price since that month, from month to month. And that's how it's sometimes unrealistic. Whereas if you have a huge collection of data like the Zoopla, and also the government statistics, then you can strongly project and forecast where house prices are or where they've been before, because the data overall has a strong correlation, strong match with each other. I think that's the most important thing. But the great thing about the UK House Price Index, according to Zoopla, is it gives you exactly what's happening in the housing market right now. So let's go through this. And we're going to go through, and I'm going to give you an insight into right across the UK as well, and also into Scotland. Interesting statistics, though. UK House Price Index give you a really good example. According to the government, year-on-year house price increase in Scotland is 6%. Zoopla right now, year-on-year increase in Scotland, 2.2%. Interesting, isn't it? Because one is historical information, one is actually real-time information according to Zoopla's website and what properties are going on, what they're going under offer for. That's how they're measuring it. So let's get straight into the summary and talk about this. So according to the executive summary for Zoopla, it's the lowest mortgage rates for 15 months, which is actually boosting sales activity. Buyer demand and sales agreed up by over a quarter since 2023. So new sales agreed year on year are up by 25%. But that remember, there's a lot more properties coming to the market. Hence the reason why if you just benchmark it on new sales, then it's completely different. But if you benchmark it on the number of properties actually coming on, proportionally it's about the same, if not just a wee bit less than it was before in terms of the percentage against the actual properties getting listed. Zoopla goes on to say buyers remain actually quite price sensitive, and we've noticed that the higher price points, and especially in the Scottish region, 300,000 upwards, are obviously taking longer to sell because there's less buyers and mortgage demand and affordability. And the same down in England as well, where their house prices have slightly dipped. But then we'll talk about that throughout this process as well. So they're saying price sensitive, which is keeping price rises in check. The days of huge boom markets, according to Zoopla, is well and truly over. But stability reigns, which is really good for the health of the property market, in terms of the housing market, in terms of the finance, in terms of bank liquidity as well. So they go on to say UK house prices, in other words, right across the whole of the UK, according to Zoopla, is up 0.7% from a minus 0.3% a year ago, which is good news because you don't really want negative inflation in house prices. You still want to go up slightly because obviously then the house prices are keeping pace with inflation itself. If it's not, then it obviously erodes. But remember, your house price is really just, if you're moving in the same locality, is really just um, 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 securing your position on the property ladder, for of any swings in terms of property prices going up and down, because you are selling and buying more or less in the same region. Therefore, if house prices go up 10%, yours goes up 10%, the other house price goes up 10% as well. So everybody wins. And you keep your stability in the market. Obviously, when a house prices are rising and you're downsizing, that's where you're getting a bonus, because the percentage less you've got to pay than actually rising, and vice versa with the house prices dipping as well. So house prices, according to Zoopla, are rising up by 2.5% in more affordable areas. So then, we're in single digit figures. We're not in double digits, and I don't think that'll return for some time soon. Almost a third of homes for sale are chain-free, which is actually good news, as investors and second homeowners sell in the face of recent impossible tax changes coming up. So we're finding investors, and we find that as well at Fife Properties and also Dundee Properties, because we actually have a Dundee Properties as well. So you've got a third of homes actually are chain-free, but 2/3 aren't. The chain-free ones are technical investors and second homeowners because of the draconian legislation that's coming in, and also the fear of the impending budget, which is coming up at the end of October, with the new Labour government. And what they are expecting to do. There's an expectation that they're going to target second homeowners and investors who have property, which might not be good news for tenants, because more investors are actually selling off, and it is actually happening right now, and therefore there's less stock available to rent, and therefore supply and demand, rents go up as a natural result of that. Okay, so they go on to say, Zoopla says that some coastal and rural areas see supply of homes for sale up 40% on last year. So we are actually seeing this. And if you look at St Andrews, for example, in Fife, if you look at the East Neuk area, you see a lot more houses coming on in comparison to what it was the years before, up 40% in some areas, especially St Andrews, but a lot of new builds coming on as well. And that obviously stabilises price and affects house prices as well, and the buyer demand. So there's the same buyers chasing more properties. So the market pivots a wee bit from a hot sellers market to possibly a seller's market, to possibly a neutral market, overall in a balanced market. Possibly at some point in time might move in some areas to buyer's market, but that'll take some time. That takes a lot of stock coming on, a lot of less buyer demand, and also potentially if base rates go up as well. I can't see base rates going up. The pound is strong against the dollar. The pound is strong against the euro just now. If you put base rates up, you will make that stronger, which will make our exports more expensive, and we want to export to other countries. So there's probably be a reluctance to do that as well. Base rates don't just affect mortgages; it affects the strength of the pound against the currencies around the world. Okay, and the outlook is modest price growth and steady growth in sales for Zoopla. Let's just look at these headline stats again. 0.7% up, and house prices than a year ago right across the UK. 25% new sales agreed year on year, and 32% homes for sale marked as chain free. Okay, so let's just look at that in graphical form. We have here, so you can see that there. Lower mortgage rates are boosting sales market activity. So lower mortgage rates are actually driving this. The banks are getting really competitive just now. However, there is an indication that today, some of the banks are actually going to revise their mortgage rates and put them up ever so slightly again. So maybe that competitive nature between the mortgage companies is now over, and they've decided to put their prices up because the money they're getting from the market is actually costing them more. Therefore, they'll have to pass that on. Number of sales agreed, flow of new supply, 16% up. So there you go. So flow of new supply year on year is up by 16%. In other words, if there was 100 properties on at this time last year, there's now 116 properties on this year, and that gives you a good indication about how that works. And the stock of homes for sale is 10% as well. Okay, so let's talk about that and what Zoopla say about double-digit growth and the sales market activity. So what does this mean? Home buyers are benefiting from the lowest average mortgage rates in 15 months, which is supporting double-digit growth in key measures of sales market activity. UK house price inflation remains positive, but it remains below 1%. So nationally, home buyer demand is 26% higher than a year ago. More buyers in the market as also a result of more homes for sale, because obviously if you're selling a home, you're probably buying a home. And many sellers are also buyers looking for a new home, as Zoopla says. The average mortgage rate for a 5-year, 75% loan to value is 4.3% compared to 5.5% a year ago. So there's a significant reduction from a year ago in terms of mortgage rates just now on 5-year fixed rate deals. There seems to be a real push for the banks to lock in gains here on 5-year fixed rates just now, and they tend to be the most competitive product in the mortgage market right now. That's the lowest since May 2023, by the way. Intense competition among lenders is attractive, obviously making that attractive rates for the buyers, especially those with large amounts of equity. So if you've got huge amounts of equity, so if you've had your mortgage for quite a while, you've never had a valuation and you've never actually been to the mortgage company and said, I'm actually looking to remortgage or put my on a different product, then you want to get a valuation because you might end up moving from, for example, from a 90% loan to value, which had a higher interest rate to it, to now probably maybe even an 80% or a 75% loan to value, which actually makes it really attractive, which is less risk for the banks, therefore lower interest rates. So that's why it's important to get valuations of your property every 2 or 3 years to make sure you're on the best competitive mortgage product possible. So if your mortgage is coming to an end soon in the next 6 months, then by all means reach out for a valuation. We are available in the Dundee and the Fife areas. Okay, so let me talk about the number of sales then Zoopla say is agreed is 25% higher than a year ago, and as households have held off making moving decisions over the last 2 years, return to market as a result of that. Sales are up by over 10% across the UK and greater than 30% higher across the East Midlands and the North East of England. House price inflation is actually improving, but it's still sluggish. So what do we mean? Let's emphasize and explain that. So increased sales activity to support modest price rises rather than causing an acceleration in home values. Affordability means constraints on house price growth, and especially in the southern England, an annual house price inflation is plus 0.7%, up from minus 0.3% a year ago. House price growth will continue to increase then over the coming months. So house prices are lower than they were a year ago in the southwest of England and the southeast and also the east of England. Across all the other areas of Great Britain, house price is higher than it was a year ago, with house prices to 2.2% higher. Home values in Northern Ireland are 5.7% higher, having underperformed for the rest of the market in the recent years. London prices, for example, have registered the biggest turnaround over the last year, moving from annual house price falls of 1.7% a year ago to modest gains of 0.5% today. Let's look at that in graphical form again, right across the board, as we can see this, and the house price inflation right across Britain itself. So as you can see here, there's the Eastern England. So you can see the grey, which is August 2023, versus the purple, which is August 2024. So you can see the house price inflation. So you could see how house price inflation in East and West, Southeast and East Midlands are there. They were lower than they were a year ago, but they're still lower just now. And then it starts to flip round as we come into Scotland. Scotland's faring the best. Scotland seems to be the highest so far out the whole of the UK. But there's no surprise there because remember, Scotland is one of the most affordable places to buy. According to the UK, the UK House Price Index, which is the government statistics, the average price in Scotland has gone up 6% year on year to this date at this point in time. And it has actually, the average price to buy in Scotland is £199,000, which makes it extremely affordable still overall in comparison to when you look at London, which is an astronomical figure overall, about 400 to 500,000 for a property in the London area on average. So it makes a huge difference, and that's why some people are making the choice to actually work remotely and move to the Scottish region in the UK. So Zoopla then goes on to say that more supply will keep price inflation in check. So what do they mean by this then? So what we're meaning by that is if you've got more supply, just like supply and demand, just like I said, if you've got more properties coming into the market, you've got the same amount of buyers chasing it. Therefore, you'll find that the house prices are actually stabilised because the buyers have got more choice. Therefore, people selling will become more accustomed to realigning their price at the right price point and accepting offers which would be lower than what they were previously when the demand was really high on their properties, because you'll probably find a lot less buyers, which it is, chasing your property than it was in the boom period. So Zoopla then say rising sales volumes are being supported by more homes available up for sale. That's actually up 12% on this time last year. Many of these homes are new listings from homeowners looking to sell and buy another home. However, not all homes are brand new to the market. A fifth of the homes currently for sale were previously on the market over the last 2 years. A fifth. 20% of the homes for sale were previously on the market over the last 2 years. While market conditions are improving, setting the price right is important to attract buyers. That's what that tells you. A fifth of these people are actually still holding out for what they think is the boom period and the astronomical figure they think they can achieve. Um, Obviously, they've maybe not got any driver behind that because circumstances technically drive your house move, especially if you're in a two-bedroom flat and you've got one child just now and you've got another one on the way. You've more or less got 9 months to get another house with another bedroom, potentially at another place, unless you just, for the next couple of years, stay where you are and hold it out and wait out till you get the right price for your property. But um, actually um, um, most people are actually wanting to move anyway, so that's why they end up accepting an offer which will allow them to do that. So Zoopla then go on to say the same applies to a fifth of the homes for sale that have not that have been on the market for more than 6 months are still unsold. This explains why the similar proportion have had their asking price cut by 5% and or more to or to basically attract more buyers. These trends actually show that buyers remain price sensitive as overall choice improves. Sellers need to price sensibly. I think that's the key here to secure a sale. So if you need information on that, you need more advice on that, please feel free to reach out. And that really is the theme coming through, that sellers need to price more sensibly to secure their sale. And we're actually seeing that and we're advising our clients that as well. And then that'll come through over time. But we're still sitting 2.2% is the average house price rise in Scotland as it is real time. Historically, it's been 6% over the last year, according to the UK government statistics. Then Zoopla going to say this tax change speculation is definitely boosting supply. This is when I talked about the second homeowners and investors using in buy-to-let and serviced accommodation. The speculation over the possible tax changes in the budget is likely to support the growth in supply with investors, second homeowners and other with multiple homes considering selling. Nearly a third, in other words, 32% of homes for sale on Zoopla are actually chain-free. Outside London, one and two bedroom flats are the most likely to be chain free, while in London, 2 and 3 bedroom houses are likely to be chain free as well. It's good that they've got that information and that real time information, because it gives you more analytics to actually make a decision based on facts rather than just what you think your opinion is. Who would have thought outside that most chain free homes would be 1 and 2 bedroom flats? So higher mortgage rates have forced some landlords into selling. There's no doubt about that. Higher mortgage rates for limited companies are around about the 6% value right now in terms of fixed rates. So when landlords are coming out of their new deal, when it's coming up for mortgage renewal, they're getting onto a higher rate. Therefore, they're saying, look, it's not going to make economic sense to keep this going anymore. The restrictions in Scotland mean that they can't align the rent to the right level to absorb that cost, and they can't absorb that cost themselves because they've been marginalised over the years with the rent freeze brought in by Patrick Harvey and the Scottish Government when he was in there as the Minister for Tenants. So therefore, that's what's caused that squeeze in the Scottish market, hence the reason why a lot of landlords have decided to actually sell off as a natural result of that and just get out of the market completely, therefore restricting supply, therefore pushing up the prices in terms of rental value and also catching up It's like, when the rent freeze came in Scotland, it was like building a dam. So they built a dam, and the water was all backing up, and all these what would be natural rent rises would come through in smaller amounts year on year as a result. And basically, what the Scottish government did with Patrick Harvey's legislation about the rent freezes was build that dam, everything backed up, and now they've let that loose. The dam just opened up, and it's flooded out, and therefore rent rises have been the norm for the last year. Well, since April this year. Rent rises will begin to flow through more and more, and especially with the Scottish government and the English government with the rent regulations that they're thinking about as well. It's making landlords very, very nervous as a result of saying, look, I know we had historically low rents with our tenants, but we're probably going to need to put them up, because if then they put a rent freeze or a rent restriction in, therefore the landlord's going to be left nowhere to go with that and end up being squeezed, end up having to sell the house, and who's going to suffer? The tenant, every single time. So these tax changes are boosting the speculation and supply as they go through. Higher mortgage rates, as I said, the landlords selling 13% of the homes for sale were previously rented. So 13% of these homes are actually for sale right now, were previously rented. Most of these, 53%, are in London and the southeast, where modest yields, higher mortgage rates, and lower house price growth impacted returns for investors over the recent years. You've got to understand, landlords are looking for a return on investment. That's at the end of the day. If there's not a return on investment there, you may as well just sell up, put your money in the bank, and save, and it'll be just as safe, less risk free, less hassle. All these different things would be easier for someone to do, or put it into a pension, and therefore somebody else looks after it, and it grows modestly over the years, and you don't have anything to bother about. You don't have people phoning you or anything. So that's why the landlords are actually selling up as a natural result of that. And then pending bureaucracy is coming through as a result of the legislation that's in place. Okay, so looking ahead, many English councils, for example, are planning to double council tax for second homeowners. It's happened in Scotland already, and it's happening in the coastal and rural postal areas, especially in the English market, where they're going to do, and that will probably end up increasing supply like it has in Scotland. There's no doubt about it. The double council tax rules and legislation for second homeowners are actually forcing second homeowners or encouraging second homeowners to put their house in the market for sale. Is that a good thing? Is it not? Well, the flip side of that is obviously you've got everybody, they have visiting their properties, and as a result, tourism gets a knock, because then there's less income coming into that area when people come to spend. There's no doubt about it. When you go on holiday, you'll spend a lot more money locally than you would normally in your own town. That's exactly what happens, because you're out there to enjoy yourself. So you're going to spend more on eating out. You're going to spend more on drinking. You're going to spend more on treats and sticks of rock and stuff like that. All these different things that you bring home for gifts and everything, and accessories and all the rest of the things that you'd normally not buy at home. So that's the knock-on effect to local businesses as a result of second homeowners selling up, and that will begin to knock through in restaurants as well. It'll be interesting to see how that works. There's got to be a really good fine balance here to make sure that doesn't impact local businesses. But who knows? The Scottish government, the UK government don't really think about it. Commercial acumen's not a phrase I would use for them. Common sense is maybe not that common when it comes to the government right now, but we'll see. It has to happen. They're the people in charge. They're the people that dictate exactly what should go on overall. So let's look at that in graphical form as we look through, and there you go there. So this is a listing status. A third of listings are chain free. You can see that there. The percentage of homes listed for sale up the left-hand side, and you've got landlords sale previously rented, 13% of that stock. Greater than 5% asking, 18% of people have made a greater than 5% cut in asking price. 20% of properties previously on the market over the last 2 years, 22% on the market greater than 6 months, and 32% of that stock is actually chain free at this point in time. Okay, so let's finish off and talk about this situation where low single-digit house price inflations are ahead. Well, rising sales volumes, according to Zoopla, and modest house price inflation are positive for the housing market. let's just emphasise that again. It is a positive measure for the housing market because you've got rising sales volumes, you've got modest house price inflation, transactional numbers, in other words, are really the health of the housing market and the property sales. So that's how you can tell the health. If it stays 10,000 properties sold every year, every month, and then it's 10,000 properties again every month for the next year, then that's a stable market and a good, healthy housing market, irrespective of house prices, because they'll probably stay the same, because buyer demand tends to stay the same as well when house prices are levelled off. There's sufficient levels, according to Zoopla, of market activity to keep drawing in new buyers who are prepared to make sensible offers on competitively priced homes. Sellers remain keen to get the best price for their home to unlock their next move. But buyers still remain price sensitive and have a greater choice of homes to buy. Remember that if you're a seller or you're thinking of selling. Now, while sales prices have firmed, Zoopla finds that almost 2 in 5 sales, in other words, 37%, are agreed at more than 5% below the initial asking price. It highlights how a high proportion of buyers continue to make offers below the asking price. Now, remember, this is taken into account England as well. England tend to start at the top and work their way back because they don't have home reports, and it's based on what the estate agent thinks they can get. Whereas the house prices in Scotland tend to work around the home report value, which is based on historic information. Sometimes some of it might be outdated, actually, and therefore they tend to push their way up. So there's a meet in the middle somewhere. So house prices in Scotland tend to go up, which is 2.2%. House prices in England and Lower England tend to come down from the top where they negotiate. That tends to be where it is. So one's half full, one's half empty in terms of where we are. So then Zoopla says the proportion has improved from a year ago, but it's suggesting that low single-digit house price growth actually lies ahead. There's always been the case. We've actually said that for quite a while now, and it's good that Zoopla has actually confirmed that. There's not going to be any boom periods. That period is over now. So this is where we are right now. So proportion of sales agreed at 5% plus below the asking initial price. You can see that there. In 2018, it was round about below asking price. It was round about 50%. It started to drop when we got to the boom period, obviously. So nobody was actually agreeing way below the initial asking price. And then it started to increase again as interest rates went up. To a lot more people becoming agreeable, and then it started to reduce again as interest rates started to come down a bit, and there was a bit more positivity on the horizon in the housing market, and it's levelled off about a third of the housing stock is round about agreed at 5%, just below or plus below the initial asking price. So what is the outlook, just as we finish off for the housing market? Let me just finish off there. The housing market continues to adjust to higher borrowing costs. There's no doubt about that, through low house price growth and a steady recovery in sales figures. Expectations for lower mortgage rates are a real attraction for would-be movers, with some lenders offering mortgage rates below 4% at this point in time. The outlook for interest rates is far more certain, though, considering global events. And today's fixed rate mortgages already reflect the extent to which financial markets expect UK interest rates to move lower in the next 2 to 5 years. So this is why the 5-year fixed rate deals are there, because there's an expectation in the finance market that mortgage rates will go lower in the next 2 to 5 years. That's why you're getting these good deals on the 2 to 5 years fixed rates now. If that expectation changes, that's when mortgage rates will go up, not base rates, but mortgage rates. Remember, mortgage rates are independent of the base rates. Base rates just a fixture to take supply, supply of money supply out the economy and demand out the economy for goods and services to steady inflation. It's a one club approach, more or less. I think Nigel Lawson stood up and said that one time in the House of the Parliament. What chance have I got if the only tool in my kit to actually to curb inflation is my one club approach, and that's it. There is other ways to curb inflation, by the way, but the government seems to still think this one club approach to interest rates is the way forward in terms of the Bank of England. But that's fallen foul to a degree because mortgage companies haven't followed suit. They've been actually gone to the money market and actually gone something completely different. And that's why the mortgages that you're getting some of them are below 4%, even though base rates are sitting at 5% with the Bank of England. Zoopla's view then is that mortgage rates will settle in the high 3% and the low 4% into 2025. So if you're looking for a buying and selling, base your mortgage rate on round about these figures. Meaning a modest improvement in borrowing costs over the coming months, together with rising household incomes. This will help improve affordability for home buyers and support sales volumes. Remember, the average salary agreed year on year, according to the government statistics, is still above 5% at this point in time. So if you've got above 5% average salary and you've got house prices around about 2% or less in terms of house price growth, then you're going to see mortgage affordability to people with household incomes getting a lot easier. Therefore, they'll be able to buy a lot higher priced properties as a result in the next 2 to 5 years. So the outlook's more positive than it was a year ago, but sellers need to manage their expectations on pricing if they're serious about agreeing a sale in a timely manner overall. Let's just finish off and I'll show you some of the house prices right across the UK, just if you want to see them. So here we are. This is the percentage growth in terms of the UK. And you can see down the side, we've got there, Scotland is 2.2% in these figures. But you can see Belfast, 5.1%, Manchester, 2.3%, 2% Liverpool, Glasgow, 1.9% on average, according to Zoopla, Leeds, 1.7%, Cardiff, Sheffield, Birmingham, Edinburgh, 0.8%, still positive. But Aberdeen still struggling at -1%, and Portsmouth as well. It starts to level off in Cambridge area as well. But you see right across, see how it's all positive and single-digit figures right from Scotland down to Northern England. Then when it goes into the southern England, it starts to slightly drop, but not by even single-digit figures, only 0.3, 0.2, and 0.9%. So, which is really good positive news. Let's just flip on to the next one. This is actually the house prices, according to Zoopla, how they see it according to their data. And you can see that the average house price in the areas. Belfast, 178,000, Manchester, 227, Liverpool, Glasgow, 150,000, Leeds, 210, Cardiff, 256. Jumping to Edinburgh, 273 is the average house price just now, according to Zoopla. Oxford, London, £537,000. See, if you're looking at £200,000 in Scotland and you're looking at £537,000 in England, why would you continue to remain in England if you could work remotely? And affordability and what you would get for your money would be far better in Scotland. Aberdeen, 135,000, maybe a bit too north, to be honest. But you can see these figures right there for yourself and how it's changed year on year in each area overall by house prices, according to the top 20 cities in the UK, according to Zoopla. So hopefully that's given you a real good insight into the Zoopla house price statistics. Thanks for hanging on, anybody that's there. And if you need to ask any questions, message me direct, or you can stick some in the comments. We'll pick up later. Until next time, guys, have a great, fantastic day and a great weekend coming up. And I'm Jim Packer for Fife Properties TV and Dundee Properties TV as well. Bye-bye for now.